Welcome traders to another VolumePriceTrader video. The title today is Triple Play. And here we will examine a fairly common trade setup that involves pivot levels, providing support and resistance, stochastic divergence, and Fibonacci drawing. This is a trade setup you will need to manually find, examine, and trade, but you'll still use the VPT module to monitor for other index alignments and volume order flow to confirm the entry and help with the exit. So what we have here is the ES long-term chart, 1597 tick chart, and you can see price was coming down to a floor trader number level, and look at it bounce off almost to the tick. This is the S3. So in this situation, you know you're fairly oversold. And the stochastic made a low at this point. And we can see that the price came up, and what did it do? Bounced off to the tick to the S2 level, another floor trade. The E-mini S&P really likes to hug and search out these levels, and you use that a lot in your trading. So what does it do? It bounces off, uses that as resistance, comes down again to the S3. Now here's where we find things starting to get interesting. We see the stochastic, as it bounced off and came up making this blue candle, we look down here and see that the stochastic did not come down to the same level. That is divergence. Positive divergence, so that's giving you a long possible signal. So as it starts to come up, we're thinking, okay, this is long. Now how do we trade this? Well, there's kind of two ways to trade it. You could wait till the price breaches this high here, or use something to get you in a little earlier, which is the Fibonacci drawing. So in Sierra charts, what you can do is either right click and it brings up a context menu, and you come over here and you find price retracement, click on that, and then simply draw your Fibonacci level from the low to a swing high point, which would be obviously right here. So we'll go ahead and do that. We'll click, and we'll come up here and click again. So now we have our Fibonacci levels. A common retracement to take for the short-term little trades is 50%. So you can see that that would be 255.25. Price came down a little bit below that, so that means you would have gotten filled, and now you can come up and get your 2 points here. The only concern you would have in this trade going long is what if the price comes up again and bounces off here. So when it gets close, or at least a point in your direction, you bring your stop up so that you're in a free trade. And in this case, you can see we went very nice up here to 61, which is a good 5 plus points in your direction. So here you easily got your 2 points. And as you're in this trade, you'd be monitoring for the other indexes being aligned and volume remaining in your direction in the VPT module. So this is something to keep an eye out for. It happens quite a bit. Doesn't always happen right on the floor trader lines. You can get double tops, double bottoms in the middle of nowhere, and you can look for the stochastic divergence to take your trades. The other thing is, if you have things happening where there's no floor trader lines in the areas, you look left and you look at other areas that the price reversed and had swing points, and those become your support and resistance levels to look for when you take this trade, both for the entries and when you're looking for possible targets for the exit. Okay, hope you enjoyed this video, and hope you see it very often. Bye now.